Do you want to be a great investor? Well, in today's video, I'm going to show you a tool that I have developed from the beginning that can help you a lot if you are new to the investing world or you want to be a more professional investor. You can get this if you click on the description link in my videos, and then you will load in this data and you can easily open up these Google Sheets and just plug in the ticker symbol that you would like to get analyzed. For example, I'm going to use AT&T. You just put the ticker symbol right on the top and the data will show automatically. You will see the price to earnings ratio, the PE forward, the PEG ratio, the price to free cash flow, price to sales, price to book, price to tangible book, and price to discounted cash flow based. These are the general price ratios that I use, and these are the most ones that you will also use. You will see the liquidity ratios. The liquidity ratios are helpful if you want to check how much debt they do have, how long-term debt and how much equity they have, and what is their cash to debt ratio, for example. You will see also information about their dividends, and you will see also information about their earnings per share. On the top, you will see the target price that have analysts chosen, and you will see the current price of the share, and you will see the returns on the top right and the profitability indicators, also including free cash flow margin, operating margin, gross margin, and the growth indicators for the past and the next years, including everything. I think this is super helpful, especially if you're a dividend investor. The dividend payment tab is very helpful for you to see how the dividends have grown in the past years. And if you would like to get the number of employees changed in general, you will also get it in the number of employees pages. If you look at the analyst page, you will get a list of analysts and their ratings on the stock and their price targets, upsides, and the recent dates when they have uploaded it. If you want to get information about their income statement, you can just simply open the income statement tab and it will load in 5 years of data. Very simple, very easy, and you will see what's happening in the income statement. Same for the balance sheet. If something is missing, it's because there is an extra row. Just feel free to add another extra 2 rows and everything will load up automatically. So you not just get only the income statement, balance sheet, and the cash flow statement, but you get also a ratios page where you can see all the ratios for the past 5 years. So you can get a picture if the ratios were currently 18 and in the past years it was 15.8. You can get an imagination that the stock might be a little bit overpriced. But this is not everything. This is just the basics. If you would like to do a simplified discounted cash flow model, it's also included automatically in the spreadsheet. So what you will do is just basically copy the free cash flows that are inside your data sheet, and then everything will load up. So for example, let's take the 2020 free cash flows, and then just let's start to put it into the Google Sheets. We have the latest is 2024, so we need to date it back, depending on always on the years. 2020. So our latest one is, I guess, 2020 exactly. So we just copy the free cash flows from 2020 and then we will get it. So what we basically do is take the free cash flows that the company has been generated. We are going to have a 5-year average of the free cash flows. And from these average 5-year free cash flows, we are going to determine the next 5 years of free cash flows, and we are going to do that in a very automatic process. So we can see that the average growth rate of the free cash flows is negative. So let's, for example, say the average growth rate for the next 5 years will be 3%. You see that the Excel sheet automatically provides the future free cash flows, and then it already discounts it back if you use the discount rate. So you can set the discount rate very simply. You can say that here is an analyst expectations, so 6% for the discount rate. You can set a margin of error if you would like to, but in this case I don't want to set a margin of error, and you will get that the share price should be around $50 per share if you go with these numbers. Obviously, since the growth rate is much lower, you can also decrease these things and also get into the picture, and it can simply change. So it's about getting the right numbers. So if we say that the analyst numbers are going to be 5.75, the growth rate will be 1%, then you can see the actual discounted cash flow price should be this one for the share. You can also do this for the 10 years, very simply, the same as we have done. You can do a Benjamin Graham valuation where it's fully automatic, so you don't need to do anything. It will show that the acceptable buy price will be $11, and you can apply the safety margin of safety here differently. So also you can do the Peter Lynch valuation, and then you will see the results in that one, and the dividend discount model also automatized, so you don't need to have anything special. If you would like to do a multiple valuation model where you would take all the competitors and check their PE, you can also do that. For example, Verizon, you would get a different one. I don't know their full competitors, but if you just plug in 4, you will also see how it's doing against its competitors. So you can get this for a few bucks. It's a lot of help for investors. You can play with every stock that you would like to have. For example, if you want Apple, then you can just put in Apple, and all the data for Apple will show in. So it's very useful for investors who are new. It's very good for investors who are not new. So I hope this will help you, and I hope that you can help my work by purchasing this one. And also feel free to subscribe to my YouTube channel as I analyze companies throughout these sheet. And I really appreciate that you have watched this video. Feel free to check out the next 2 ones. See you later. Hope to see you in the next one. Goodbye.